Hello traders everyone, welcome to our new webinar. It's June 24th, Monday, and thank you everyone for joining us. Just let me know if everything is fine here, please. So can you hear my voice? Can you see my screen, please? So we are streaming this to YouTube, Twitter, and also Facebook. So I was in Germany. All good. Okay, perfect. So I was in Germany for 3 days. Was watching Euro 2024 between Slovenia and Serbia. So pretty good match. We had some very nice time there. But the most important match, as you know, will be tomorrow. So excited to see how everything will unfold. Regarding markets, now I'm trying to get back into this trading mood. We haven't seen much of volatility on the FX last week. I mean, despite lower inflation in the UK to 2%, still Bank of England decided to leave rates unchanged. On the other hand, Swiss National Bank surprised by a cut for another 25 basis points. So Swiss franc is quite weak, and this weakness was also visible especially on Friday, when we also have seen some dollar recovery as stocks sold off a bit after US manufacturing and services PMI data. So not only that, I have been repeating that also ahead of summer we could be seeing some profit taking, because we have seen some very nice moves over the last few weeks, and also the Elliott Wave patterns suggest that maybe it can be time for a potential correction. It's not only stocks. I mean, you can see that we are looking at metals that are in a pullback, right? We are seeing cryptocurrencies in a pullback while dollar is sideways. So maybe it's now also time for stocks to do the same. And if stocks will make a pullback, will make a retracement, then of course this means that dollar could actually stay in a very big range, or possibly even higher, can possibly move even higher. Now if we look firstly on the 10-year US notes, I'm still favoring the recovery here for a wave C. Still think that there is plenty of room for this wave C to extend higher, but of course nothing moves in a straight line. We have seen some pullbacks since market bottomed here in April, so possibly that's a leading diagonal, and we will see now slow price action for summer and then another jump higher. But overall I'm expecting more gains here. Okay, it can be straight from here, or it can be a pullback, and if it can be after a pullback, of course I would certainly not be surprised at all. But we have to realize that clearly that was an impulse up from 2023 lows, while the current drop was overlapping and very corrective, and we also already came out of this corrective channel. So I think that more gains here could be seen over the next let's say in the second half of this year. So whenever we are going to see more strength, or US yields will finally came to the downside even further, that's when dollar index can also break down. So to give you maybe another bigger perspective here on dollar index, maybe I should draw the wave counts here. Okay, so what I'm looking at is that this was a very sharp reversal from the upper side of this very big channel here on visible on the monthly chart. So that was the very first leg, okay, from the highs. Can be wave A, wait just a second, can be wave A. Now you will see wave B, and another leg to the downside could be wave C. So it can be just a temporary reversal that will take years to unfold, but still we are missing this incomplete structure to the downside. So I think that there can be a retest of the lower side of this channel. So this tells me that we are now in a corrective phase, and as you know, corrections sometimes can be very tricky, not always clear. So we are actually seeing price in the middle of this contracting range here since for the last 12 months. So again, it can be, triangles can be tricky because you see market moving sideways and you never know for sure if that's a wavy triangle within a more complex, deeper correction, or the whole correction is a triangle and you will see continuation to the downside like I'm expecting here with the count above here. So in either case, these are corrective patterns up from 2023 lows. So I think that still this year dollar could get much lower, but of course I will not rule out a potential retest of 108, because if we are in a triangle here, I certainly realize that can also be a wave B triangle and you will see test of 108 and then market will reverse to the downside. But I still think that we will not go back to 114, but rather we will drop and retest 100 area. Okay, so my idea is the dollar will get weaker as the US yields will come to the downside. Maybe Fed will be looking for potential cuts later this year. Maybe, who knows, maybe they will surprise, they will look for 2 cuts. We have elections. They certainly they certainly want to give us impression that markets are doing well, that are in a recovery, and that the economy is also doing well, which certainly would be helpful if rates would be lowered. So in my opinion, I still think that dollar will see more weakness, but unfortunately we are now in summer and I don't think that we will see any kind of a real breakout just yet. Okay, I'm afraid that potentially we will stay trapped in this range. But when looking at the euro, here's something interesting maybe to consider for, let's say, for the next few weeks. Obviously I also here have 2 wave counts. The primary one is a bullish triangle, okay, but even this triangle, obviously it's not completed yet. We are tracking potential wave D within this 5-wave incomplete structure. So we would expect more upside here in the next few weeks, maybe few months, okay, from the lower side to the upper side of this range. So there will be limited upside. But what's good about this is that I have another wave count here, another interpretation, which is actually a bearish wave B triangle, suggesting that we could drop firstly to 104 before market recovers. But what's exciting about both wave counts, that at least temporary recovery can show up. Even if it's only wave B, there's still plenty of room for market to reach the upper side of this range during summer, okay? Or possibly we will have to look for this triangle and we'll see much more upside with the breakout above this trend line at some point when wave E is also finished. So in both cases, I think that still now in June we will not see any kind of a real strong move to the upside on the dollar. Probably just consolidations that may not be over just yet. Also, of course, we have to consider that if stock market would come significantly to the downside, if something unexpected happens, of course, then dollar could break much earlier than we think. But what I think it may happen on stocks is, obviously I'm expecting some retracement, but retracement is not a bear market. Okay, retracement is just a temporary pause before market can make another step to the upside after summer. So that's my overall view regarding the dollar and the S&P 500. Now also cable is maybe very interesting, very attractive. I mean, it can be very attractive also in the next, let's say in upcoming months, because I think that we have a pretty good wave structure here. Again, 2 wave counts, which suggest that we can see more upside here. It can be triangle here, the bullish one, and you're now in a wave E with very nice support at around 125, which is the 61.8% of wave C measured from end of a wave D. So that's the very important level to watch. But if maybe we will see, let's say, this trend line broken around 128 much earlier than I think, then obviously this can also send us straight to the upside, and even with this bullish interpretation, which is also very valid and shows potential third wave that can still unfold over the next few months. So what I'm expecting here is more upside. And what I really like about pound is that move up from from April can also be counted in 5 waves. And now you have this pullback, and this pullback, by the way, is not a surprise. It occurred because of firstly on speculations that maybe Bank of England could be looking for potential cuts. Inflation came back to 2%, which is their target, but now cable is trying to stabilize because they did not deliver the cut yet. So maybe now pound could look for some supports here during summer, but then eventually we will see a new push to the upside. So first support I think is already been touched at around 1 to 630. Deeper one would be around 1 to 5, which, as I said, with a triangle count could be the 61.8% and also this trend line as well, connected from this October 2023 low. So whenever risk on is back, I mean, is still here, but after a retracement, if we see some pullbacks, very nice pullbacks, and whenever these cycles are ready to resume after a pause, I think that pound could do very well. Also, Aussie is one of it as well. We are seeing here on Aussie again some very nasty price action here. Let me just what if I hide this for a moment, or I can delete this as well. So you can see that actually market is going nowhere. We are just chopping around here, up to the downside, higher, lower, back and forth. So it's not a tradable market, okay? But whenever that's happening, what you should look for is just make a simple box, and you will see if the market is chopping around, and then compare this price action, okay, with the move that unfolded prior to this range. And you can clearly see that was a very nice and very strong move. So if that was very nice and very strong move and extended in a short period of time, actually maybe even shorter compared to the current range, okay, which is longer in time but not that deep in price, well, this means that probably that's just a pause, and that's the main direction that we should also expect after this consolidation is over. So I am looking for this to be as a potential wave B correction. Now again, sometimes, because unfortunately that's how the market is at the moment, you have a lot of overlaps. That's why you may also consider different wave counts, and some different wave counts will sometimes help you to build a better trade plan. So what I'm looking at here is a potential deeper ABC formation here, deeper ABC pullback. The 50 and the 61.8% would be the ideal support here at 0.65 to 0.6540. That would be ideal support. Here you have another wave count where the first support is already at 66.10 or so, if that's a bullish triangle, which is a very, very good and valid interpretation if you ask me. But what's good about it? Both are bullish patterns. So I'm waiting to see if we retest this 6600 or 6610 area, and then let's see if market can rally, or possibly if we break this trend line support, then obviously much more important levels and support levels still could be reached a little bit later. But still, I think it will be part of this correction that sooner or later should send us to the upside. So I'm watching Aussie very closely, pound as well, for potential longs here over the next few weeks, maybe even earlier. We will see how this will unfold, but I certainly think that Aussie can do very well. It's not only the Aussie that can do well. We also have Mexican peso that is doing very nice. Potential reversal here. As you know, we have seen this free wave recovery last week. We also discussed that that's whenever you have very big downtrend and then a counter-trend rally in free waves back to the area of a former wave 4. Well, and if the wave count allows you to label this as a wave 4 that is part of a higher degree downtrend in completed structure, then obviously you should look for this kind of wave count. So far, we have seen a very nice reversal here, and I would not be surprised if this carry trade will resume back to the downside. Okay, we also have crude oil that is doing very well, and maybe this can be linked with Mexican peso as well. But the most important link would be obviously stocks, and stocks, by the way, have seen a pretty nice and extended move to the upside, and maybe there's some time for Mexican peso to catch some moves back here. Not only dollar Mexican peso, you have dollar NOK here as well, showing a pretty nice solid wave structure for the next few sessions. You can see some very nice 5 waves to the downside here, So I think that more weakness should occur after this pause. So what we are looking at is a potential triangle, and I would love to see maybe 10.70 retested, maybe even 10.8, but this whole area here, in my opinion, can be quite attractive for potential shorts here, up here, okay? I'm not sure if that's going to be really a triangle, would be something more complex here, but certainly this whole area up here is very, very nice potential resistance. So I still think that this weakness, which by the way can be only temporary towards 10.10, is still incomplete, okay? And since I mentioned crude oil earlier, maybe it's good to review it once again. So crude oil, as you know, still trapped in a very big triangle here. I think we are in a wave E. We will see more weakness maybe here in the second half of this year. Firstly, we have to complete this ABC rally. Very nice resistance would be around 84. But for now, since each leg within a triangle should be made by 3 waves, I just think that this wave is not finished yet. Maybe even some traders will look for potential opportunities on the long side after this dip, because if you look closely your intraday time frame, you will be able to count 5 waves up from these June lows, okay? But still, I don't believe that we will see break out of this range during summer. I'd maybe just retest the higher prices, and then potentially we fall back towards the lower side of the range. But if we zoom this out a little bit, I think that the next leg, or maybe even better if we look at this wave count here, I just think still that the next leg is going to be to the downside. This could help inflation to bring lower, to soften inflation, and maybe that will be one of the reasons why Fed could be looking for potential cuts. If I'm wrong, and let's say that market start breaking above $88 per barrel, then maybe will be more complex, but still will be just more complex correction. It would not be an uptrend. Okay, I still don't believe that we will retest these 2022 highs anytime soon. Now let's take a look on dollar yen. On dollar yen, we will look at the daily wave count. As you know, last time when we spoke, I said that we are most likely moving out of a triangle here on a smaller time frame, and unfortunately that this bullish case is still here, because Bank of Japan, as you know, on the latest decision meeting, they did not change their rates or bond buying program, but they could do it on the next meeting. So we will see how Japan overall will react to these levels. Certainly, I still believe that higher we go, bigger is the risk that Japan will again intervene on the markets, and that markets could see move to the downside. But as long as we are trading above this trend line support, okay, connected out from this wave E, I think that that's still healthy uptrend. But of course, if we start falling from here and back below 157, bears are still very possible. But I also realized that this one is actually not a bad wave count at all. Okay, it's a potential ending diagonal where you're seeing this move out of a triangle that I mentioned earlier that will take us to new highs. Okay, but that's also very valid and possible because each leg in ending diagonal, like wave 1, 3 and 5, is made by 3 waves. Okay, so even if we breached above 160, which was the high that goes back to April of this year, I still think that there will be some resistance around 162 to 164. So I still believe that dollar yen will eventually see a very sharp reversal, but maybe we also need dollar finally to give up and to see more weakness rather than just staying in this consolidation that we are currently observing. So dollar yen at the moment testing some very important key levels, but I still think that this year we will see a reversal. Now let's take a look also on metals. So metals, as you know, I've been saying that we are in a pullback. Looking here at the daily chart, nothing has really changed since last time. I know that we have seen some very nice move to the downside, to the upside here in the mid of last week, I think. And then on Friday, market reversed lower, while dollar have seen some kind of recovery and stocks also sold off. So I just think because of this Friday's price action that we are still in this in this wave 4. And ideal support for wave 4, as you know, is the 38.2% and the former wave 4. The 38.2%, if we try to be more exact, is at 2267, while above that we have this wave 4 termination level at 2270. And I'm also very certain that below this swing low here, there are plenty of stops. Okay, so some liquidations may happen down there. And if that would be the case, as you know, market flows will change, market can stabilize, sentiment will change, and that's when we are looking for market to complete this wave 4 correction. Okay, maybe even China, as you know, they didn't buy any gold in May, and maybe they will do it now. And as soon as they will announce this, I'm not sure if there were any kind of latest news, but whenever this comes out, I think that this would be very bullish for gold. And I'm not sure why they wouldn't buy gold if they were doing on a quite constantly regular basis. So I think that now when they have lower prices, maybe that's even better. Maybe that's even better for them. Also, looking at silver, very similar idea here. So also wave 4 pullback, unfinished recovery still, but I would not be that bullish. Whenever we breach the new highs here around $34-$35, well, that could be the maximum for silver. So keep in mind that if you zoom out, we are coming out of a very big triangle. So I would not be that excited whenever we start rallying towards these levels here, because I would realize that maybe we are in the final stages of a higher degree recovery, which, by the way, is underway since 2020. So just higher we go, closer can be the ceiling. So just be aware that maybe easy trades will not be to find whenever the market, in the bull run, of course, whenever markets start breaching these highs. But for now, if we look maybe closely here on the 4-hour time frame, you can see that we have some overlapping price action. But more importantly, we have seen only free wave rise from this lower side of this corrective channel here at 2860 up to this 30.70. Okay, so market made this overlap with 29.60, which means that was not a 5-wave movement. It's not an impulse. It was a very strong third leg, but it was completely erased. So for now, I just think that we have to focus and be aware and prepared for more potential weakness. But still, it could be a move in 7 swings, where you have this in the middle expanding triangle, like in a wave B. So very nice, very strong support still around 28 to 28.50. Okay, and whenever we retest these lower levels, I would be looking for potential reversals here. Now let's take a look also on the S&P 500 that I mentioned earlier. So as you know, we've been warning about potential completion of this structure. Not only that we have 5 waves up from that April lows, well, we can also count 5 sub waves from that end of May, start of June levels. Okay, so maybe this structure is the most important one, because whenever we see 5 waves, we are not really convinced or sure what kind of how big can be the next pullback. But we still can expect a pullback back to the area of this smaller degree of wave 4. So I still think that more weakness here in the next week or two could be seen, or maybe just we will chopping around. But I certainly do not see, with this kind of a price action, new leg higher from here. I just think that there can be some post now, and it really depends what kind of a structure market will form back towards this 5462 level. If that would be very strong in 5 waves, we will know that market will most likely see more weakness. If that will be just in 3 waves, something like that, then we could be looking for another resumption higher and bounce. But for now, it looks like that market is just taking a pause. And it's not only the S&P 500, obviously these are the single stocks that are driving these major indexes around. And if you will look firstly maybe on Apple, I really don't have a wave count here, but you can see the idea. So that was a flat correction. We completed it here. We rallied to new highs. We hit the 161.8% extension. And if you draw these trend lines here, I'm just afraid what may happen if we start falling back below this upper trend line. I don't want to mention the potential wedge formation, but that what could unfold then if we really start falling back below or back towards, let's say, 194 or so. So just be aware that yes, it's still a bull run, but it's a very, very late stage and you don't want to play around at these levels, I think. Also, if we look at these semiconductors, I've been talking about this one last time. We have 5 waves up. Some important levels have been triggered here. Again, very dangerous place to be. I just think that there is a risk that we will see a pullback. Of course, market can always extend towards much higher prices, but again, that's not the setup that you want to see, especially not in Elliott Wave terms. Whenever there's a 5th wave, there can be a lot of inflows, but that's when market goes a little bit over optimistic. You should make a step back and just be aware that maybe there is something else behind the corner. You just rather wait on a pullback rather than chasing market up here. Also, last time we talked about MD. This one we actually shared 4-hour time frame. This one actually made a pretty nice bounce here, and I still think that there can be more upside, but that's more like a short-term view because we have these 5 waves up, 5 waves rally from start of May, then a counter-trend movement. So I still think that more upside can be seen here, but just be aware that there can be a limited gains around 180. It doesn't mean that's a bull market. Okay, it means that we can be just correcting higher before going lower, because still that was a pretty strong sell-off down from March highs. So maybe we're just taking a higher degree pause. So again, it really depends what kind of a trader you are. For short term, this still looks solid and good for more upside. For longer term, I just think that it's better to stay on a sideline here. What I have left here, Tesla, we also covered this one as well, and it didn't change much. Still could be here in this in this potential complex correction, or maybe wave C has finished here, but overall I just think that more upside can be seen here. We can break 200 I think after this pause, rather than falling back below 140. Now, cryptocurrencies. So, what's up with cryptocurrencies? Well, before we go to cryptocurrencies, I forgot to say this at the start. Please subscribe to our channel, press a like, leave us a commentary. If you have any kind of questions, let me know. And also make sure to visit our website, wavetraders.com, if you find this analysis useful. Okay, cryptocurrencies. Here we are making some very deep pullback, but what's good about this one is that we are most likely just taking a higher degree pause, and maybe this one is ready to resume higher when stocks will finally again move to the upside after a deeper correction. So unfortunately at this stage, I'm afraid that through summer we can be just chopping around on cryptocurrencies, maybe even retest some lower levels. As I discussed last time, okay, we were looking at this chart, and where yellow boxes represents summer, okay, summer months. So there was no real breakouts during this period for the last few years. Yes, of course, there were some movements here in August in 2021, but generally speaking, it was not any kind of a real progress, especially not to the upside. But then after this summer pause, we have finally seen some volatility, and it was usually a break to the upside, especially when you are in uptrend and you have a pullback in slow summer range. So I would not be surprised if maybe this similar price action will again occur this year. So maybe you will have to wait till September and October. But if you look closely here, this certainly looks like a very nice consolidation, and maybe we are now just building a new one. But of course, if stocks will make a pullback or just slow down here and stay trapped in a range, still cryptocurrencies, Bitcoin in general, can retest even 55,000 if not lower. So still, I think it will be a correction, but unfortunately correction is incomplete. And whenever there is an incomplete correction, there are multiple scenarios. can be a triangle if we hold this 56,000. Okay, can be even a deeper 55,000 if we break these levels out, but that doesn't mean that this market would be bearish. Okay, still I think it's a consolidation, but unfortunately still it's incomplete consolidation. So if you want to ride this market, you just have to make a proper plan whenever you decide maybe to add the lower levels, if this your risk allows you to do so, or maybe you just wait on this correction to fully unfold in 5 waves if that would be really a triangle, or in 3 waves if it's going to be like a deeper flat correction. And then obviously whenever these corrections are finished, you try to play on the long side. But for now we are just stuck in the range here and it's not going anywhere just yet. But if we look here maybe at altcoins that excluding top 10 cryptocurrencies, you can see that we have some pretty nice corrections here as well. So I think that we are in a temporary pullbacks. Maybe some major coins are now getting hit, but generally speaking, whenever these major coins will again resume to the upside, maybe later this year, that's when even this one, excluding cryptocurrencies that are not in the top 10, will also see some nice move to the upside. If we look here maybe on Ethereum as well, well, you are seeing here some nice pullback. It can be wave 4 maybe finished here and you are now in a sub wave 2 of this wave 5, or possibly wave 4 will be more complex like a triangle. And one of the why we are considering this is because if that's a wave 4 of the same degree like this wave 2, well, retracement regarding price was quite similar. Okay, you can see these orange lines, but in time it was not that similar. Okay, so I'm just afraid that maybe you can see the projections, the time projections, maybe the wave 2 land could take us compared to wave 4 till September. And that's what I also talked about earlier, that maybe these are the perfect months when we may finally see break to the upside. But of course that's definitely very nice and very interesting first support right now here on the Ethereum. But with the Bitcoin, what's doing and other markets, I'm just not really convinced that's the perfect time. Also keep in mind that last time when we warned you about these exchange outflows, so there were plenty of exchange outflows to private wallets on the Ethereum, and obviously this in my eyes was seen as over optimism, especially because the readings was the strongest in months. Okay, and what is happening since then? Well, market is just going even lower. So there should be even more liquidations within these pullbacks, and maybe that's finally when the market will try to stabilize and turn to the upside. Okay, traders, that's it for today. I hope that you enjoyed this webinar. Again, if you are interested in more of these analysis, make sure to check our website wavetraders.com. We have plenty of these analysis on a daily basis for our members. And please press a like again if you didn't do yet, or subscribe to our channel. Follow us on Twitter for more free updates. Talk to you soon. Bye.